Larry, when you've been on, the last couple of times, you've talked about public-private partnership, the need to be able to have something bigger to be able to attack the deficit, which continues to grow. Are you seeing that? And is this administration helping that?
Well, this administration is very open to all businesses to talk to them to try to find ways that we could build our economy. So, there are many conversations going on with this administration. That being said, I mean, you're rightly in noting that the greatest risk we have.
Larry, I believe that in your most recent 2 appearances, you discussed public-private partnerships and the necessity of having a larger plan in order to combat the deficit, which keeps getting worse. Do you see that? Is this administration contributing to that? Well, this administration is really open to all businesses to talk to them, to try to identify ways that we could improve our economy. There are a lot of discussions with this administration. However, you are correct when you say that our deficits pose the biggest threat to the American economy. Additionally, our deficits will overrun this economy if we do not grow it by 3% annually over the next 10 years. We are all aware of it. I wouldn't be concerned about deficits if we could increase our economy by 3% by opening up private markets and capital. For our economy or scale to grow at a rate of 3% annually for more than a decade is a huge L. That is a serious problem. Therefore, we must concentrate on figuring out how to release this capital. We must concentrate on how to develop this. Stuff is the reason I think we should be developing our grids and all of stuff, and why I adore this AI build-out. This is the kind of material that could drive an economy with a 3% growth rate, according to the second quarter figures, which showed a 3.8% GDP in the second quarter. 50% of that was attributable to capital expenditures on technology. What do you know? But if you compare it to Europe or other areas in the world, we're the only country that has this type of capex. I'm confident that we'll prevail because of that. And I worry about that future when I travel the world discussing other economies, and I don't see that capital expenditure taking place there. I suppose they don't, but we have the capital markets to back it up. We hope we'll always carry on the conversation. Larry, however, there is a bubble in investing. But does it imply that a bubble is bad? Without a doubt, the amount of capital being used is exploding. In terms of geopolitical stance, these expenditures are necessary for our nation to become the leader in AI technology. Therefore, I'm rather pleased that we're spending this much money as an American. We should be first, please. Let's begin there. Does that mean there are going to be some failures within the confines of these investments? Of course. However, I do think that we will need to make these enormous financial investments. When you consider it, investing in AI involves more than just purchasing CPUs and GPUs. It entails making investments in power supply, power grids, and HVAC to expand this out. More people will also need to be employed. We predict that the cost of data centers, power, and other expenses alone will amount to $1.5 trillion. However, if you anticipate the imminent need, I can say that BlackRock is investing more and more money on it, and we are seeing positive results from the volume of information we are attempting to provide and the speed at which we wish to do it. Every big business will need to be investing more and more on this. In my opinion, some of the investments we've seen so far, in my opinion, are more focused on the cloud and its capabilities than on artificial intelligence. Therefore, I don't think this is a bubble, but I do think this is money that will be used wisely most of the time. Will there be 1 or 2 failures in that, though? Of course, in capitalism is that. There will be some significant winners and some significant losers. Naturally, we must, but you will be all right in all of that if your portfolio is diversified. Yes, and you had better choose the appropriate stocks if you're a stock picker. However, I'm often helpful when it comes to our large hyperscalers. And I do think the Microsofts, Alphabets, and Metas are in a great position to win. Additionally, you can observe how Oracle is changing and what Larry is doing to change Broadcom and what Hock Tan is attempting to do. In fact, I am proud of America's role in this. And I do think that in order to succeed geopolitically, we will need to invest this money. It really is. Here, we'll begin with more technical information. What patterns do you observe in the most recent price? Since the market as a whole turned over, I will reiterate that Friday's breakout to a new all-time high was followed by a full erasure of that strength with velocity. Yes, there was a large red candle on Friday, but the market as a whole experienced that. The first chart we'd want to look at, in my opinion, should give you a general idea of what Nvidia has accomplished since the AI boom began in May 2023. So, we've got a 3-year weekly chart here that we're going to take a look at. And it's kind of representative of where the stock has come from 3 years ago. You look over there, Jenny, 3 years ago, we had a price of roughly $11. And on Friday, we hit those all-time highs above 195.60. However, you can see the trajectory of what the AI trade has done for Nvidia by looking at that large red candle here, as I stated. Additionally, keep in mind that they exceeded expectations and began to raise guidance in May 2023. Now, let's kind of drill in a little bit farther on a shorter-term chart here. We're going to examine a 1-year, 1-day chart that includes a few basic moving averages and momentum-style studies. We have a 1-year, 1-day chart. Then, as Jenny indicated, as of Friday's close, the stock is up over 36% year-to-date. We're going to be up probably another 3% here today. The price of the stock is between $188 and $189. The 50-day moving average is currently at roughly 179.15. However, the momentum behind the stock's recovery is still present today. On Friday, we didn't quite reach that point. The 20-day simple moving average, which has served as a support zone for the past month or so, is where we dropped to around 182. If we can stay above this 179 level, I believe it will be crucial. Over the past few months, there has been some volatility below that level, but this is where we've seen the rebound. Will Nvidia now be impacted by the tariff negotiations? That doesn't really matter though, because they haven't yet reported any chip sales in China on their top and bottom lines. However, it could have some adverse effects. Still, I'm recovering well today. As I said earlier, the RSI settled around level 51. Momentum is hence at the center. Although there has been a downward trend, Friday's price movement was the only source of that. So remember that. Keep an eye on the RSI during today's rally, but within a more constrained range. It is by no means the case that we are saturated. We didn't rise over that 70 level, which is seen as overbought territory on that relative strength index, even after we had reached all-time highs. All right, I have been saying, okay, they didn't include any of this potential impact on their earnings call or their guidance since Friday. I mean, this has been the case for weeks. Therefore, at the very least, there is no actual revenue that can be obtained from China that hasn't already been, it would only be beneficial. However, I had a counterargument from someone who said, well, we have seen shares also trade with basically the expectation that we could see this additional revenue, that we could see that other impact from China when you consider, for instance, Nvidia for trade purposes. Is that pulled forward on this valuation? Does that create a risk? Yes. We don't know exactly what China expects from their guidance because they didn't give it to us. But are we still expecting this? Indeed, that's the problem. Hey, Jensen Huang said bluntly, we need to open up our sales to China. That is being resisted by the Chinese government. I'm not sure what kind of effect that will have, but keep an eye on the investment figures. I don't believe there is an AI bubble as long as investment in the field continues. However, as this is a neutral to bullish trade, let's go on to the example. It's a little more passive. You're still taking a chance on the upside with this trade, but you're also giving yourself a huge buffer in case you believe the stock will stay above a particular strike. Keep in mind that it is not impervious to market-wide declines, so you must consider that. I therefore examined a cash-secured put here, with a neutral to bullish view. I want to invest in the weekly options that expire on October 31st and have an 18-day expiration date. This is one of those tactics you can use weekly, bi-weekly, or monthly if you believe the stock will stay above a particular level. We therefore turn to the weekly options on October 31st. The 175 strike put cash put will be sold. Isn't it a nude put? If the stock were to somehow drop to zero, you will, however, sell this 175 strike put. Around 188 is when the stock opens up here. You can earn $350 per spread on this deal. Thus, you're going to get a credit of roughly $350, however. It pushes your break-even point all the way to the downside, down to 171.50. That is almost 9% away from the stock's expected opening price. You have that large cushion then. Your chances of success are better.